For Starbucks, and Tesla, I asked everybody, who got in or who held from point A to point B. That's something we're going to talk about because it's one of the biggest struggles that I would say the majority of people that join our group or adhere to the strategy that they encounter, is being able to actually let the trade go where you want it to go, or more or less, you're letting the chart do what you see or what you intended it to do. And we talked about Starbucks for what? Well, I took it on the 3rd of June, so it's the 11th now. It took a good expiration for that, and risk reward was absolutely in our favor. And I know that we're also going to be going over how to trimming, because that's something else that I know you guys and everybody else. It's not like you don't feel like you're the only person who can't get this. You are probably sharing some of the same struggles as a lot of your peers. So, um, I think the last time or when we left off, we were talking about, pull it up. We were talking about the rock climbing mentality, right? We were talking about um, closing candles, right? On floors, building on floors. And today we're going to keep exploring that. I did grade your guys's, the people who did do it before class yesterday, well, when class was supposed to be. And so the video was posted in its own channel. And a lot of you guys got it. Some of you guys definitely need to keep brushing up your skills. There's, again, hopefully after this class and, maybe a couple of lives posting your charts, you'll be able to kind of move forward with that. But so I think, yeah, we'll go ahead and cover the new lows. And this is what I call, or dubbed, passing the baton, or pass the baton. And this is, I mean, everything that happens to the upside happens to the downside, right? The mechanics don't typically change. In fact, I would, in a downtrending market, or a market that's just fell back underneath its highs, the type of price action that you'll see as you pass the baton is typically quite volatile. You can make quite a bit of money. I actually am a big fan of red candles, but I'm not somebody who's completely biased or tries to short everything that moves. So sellers have a job, right? A job that they have to accomplish. And that is basically to pass or push price into an area that sellers can recover, right? And the rock climbing analogy doesn't work here because, rock climbing down just doesn't make sense, which is why I use pass the baton. Closing under where seller candles close will give sellers control of the price again. So as we can see in this example here, this is an area of consolidation, right? Our median, we're going to try another straight line here and see how that works. Not bad. It's probably the best yet. And of course, if we are trying to push price down, right? And this is where sellers control the price, or where they pushed price down. You can see the candle closed, the candle opened, and it immediately fell. It is the goal of sellers to not only push price down, you'll see it's harder to pull out the blade when it's sunk in real deep. So shooting it down to cost basis gives you a better chance, right, of either continuing down just straight down, or so it works both ways, right? When price bounces off of that 50% mark and it goes back up to that high, this is also where sellers will resell or sell again or average up, if you will. And it's often, this is actually one of the key things that we use inside of the system in order to see, like, say we're trading something in an uptrend, we want to be able to see that price is going to break back out of the same area that it fell inside. Hold on one second. There we go. Can it, yeah, wait, sorry. Can you guys hear me? Everybody hear me? Mic check. Okay. Okay. All right, cool. So price moves down, candles closing, right? Underneath the top of the box in layman's terms, right? And it moves down into cost basis. At that point, if you were somebody who was trying to take a downside position, having a stop loss and entry near that mark, or, you know, I'm one that likes to use the structure above it to try to dip into it. But this is ultimately where you could, if you missed that first leg down, where you could re-enter, because this is where sellers have to make that stand. If they cannot, then price will move back up. So this is again, you know, it's the same thing as buying. We're trying to grab hold of that floor. And this, in this sense, we're trying to stick our foot in that sand trap, right? And we want to see the volume, right? And so what you'll see is that, or when I found cost basis, right? Cost basis, Discord's been doing weird stuff. Cost basis was found by me using volume profile. I was exploring indicators, exploring tools, and a lot of people use volume indicator, and, you know, I wanted to know why, and they were like, well, you know, a lot of the times that high volume is where you'll experience a rejection, and that's about as much as I got out of it. Volume profile, right? Most people have volume bars, for those of you guys who are new, that are down, okay, that are down here, and they represent the volume for each day, right? Or each hour, or is it? Okay. It's not me though, because I'm fibered in. So that's the volume per day. When you look at volume profile, you'll see volume, and I'll show it to you on the chart in a second. But that's where I found, right, that the majority of the volume is at the 50% mark. So when price moves down and it bounces back up, you're pulling the orders, buyers, right, out of, because that's just where price is going to bounce naturally, and you'll see that everywhere. So buyers, by pulling it up, you'll see it actually does bounce, retest, and then you wick off that mark and push down. This pulls the volume out of cost basis, basically weakening it and making it easier to break down from. So closing in the box does not promise a new low, but it does give sellers control of the price. And again, we're going to go look at this on the chart. These are context clues, but obviously deeper analysis is needed for what's underneath the box, what's outside of the box. Did you leave empty space behind? These are things that we like to pay attention to. So if you just give me just a moment, this will give you guys time to restart your Discords if things are being stupid. Second, there we go. Check your output for Discord, your volume, click on my name and try to turn my volume up. Same as happening to you. What are you guys on, your phones or laptops or desktop? Desktop is fine. I would assume so. I'm on my phone. The stream is fine for me. Filio is 6 producer. Do you guys happen to live in the same state? So let's change this screen real quick. Okay, just checking. Remember, this is being recorded, so. Okay. There's cost basis. MacBook. So while we're on the charts, again, I'm going to take your guys' request if you want to look at it that way. And we're going to look for the same thing, right? I'm going to try to show you guys examples of where this will happen, right? So we could even just use what's in front of us right here. And we could just come to a simple conclusion, right? If price moves and closes underneath the 2 points of contact here at 658.72, this would ultimately give sellers control of that price, and then it would be the 50% mark typically that we're looking at for that next level down, right? Now, a lot of the times, and this is why I'm showing you guys, what you broke through, right? And this is not a punchback, but it is, in some ways, it doesn't promise new lows unless the floor is broken again. But when you break through an area of consolidation and you pull back, typically you're going to bounce off of the top of that structure. And what you do from there, you could continue to consolidate, whatever. But if you fall underneath that floor, right, that you broke out from, that does the same thing. The only difference here is it matters what's under that price. Did you have empty space? You're still going to fall if you lose. So what could be guaranteed in some ways, at least for, in my book, is that price, when it drops below that ceiling, is likely going to go to cost basis. But it's also, if cost basis or the old cost basis is broken, it will just take you down to the bottom floor of that box. Now, in this case, there's a box already there. So by dropping into the top of that box, you would also be losing that floor, which would have a large impact, right? And definitely help fuel price moving further down. Garrett, when you say closing underneath where sellers close, give sellers where sellers close, give sellers control. Do you mean to say when price is pushed against cost basis? So no, if it closes, so you could close underneath. So like, cost basis is all the way down here. If you close underneath that, 655, 657 area, or when I say 650, I took the line away. Then if that closes underneath it, then price is more than likely going to go to cost basis. If it already has, then it bounces. That bounce, if recoverable, will move up to retest the top of that. Now, if it can the quicker it does it, the more likely you are to fall, right? For all of you guys who are new, price action doesn't typically hold up when you move too fast unless you can recover something, which is why we use that rock climber mentality, right? And let's look at an example of that by using the same data points that we're using now. Here's the floor, right? Any minute now. So in this case, right, price explodes through a punchback right here, right? Consolidation at cost basis, and explodes up into that bottom floor. What is it not doing? It's not grabbing the floor. It's pulling back, right? So price having no structure underneath it and nothing to grab onto is going to go back to where it has volume. Why is it going to do that? I use the metaphor. I like metaphors. But I use the metaphor like if you're climbing Everest, right? What is at certain points along that mountain? What is it? What do we have, right? Camps. What do those camps have? Supplies, medical shit. You got to go back to base. You got to go grab supplies. You don't have enough to get past that next stop. So you got to come back. And that only makes sense because if you rushed up, let's say you moved really quickly up that mountain and you exhausted yourself and you can't grab onto that ledge and everybody's tired, sometimes you got to head on back, right? You don't have to go all the way back to where you started, but you got to go back to where safety lies, and that's typically off of what you broke out of, right? And that's what we bounce off of, right? Meta then, of course, sits in that space. See how neat that is? It sits in that space in between what it needs to recover and what it could lose. And this is where people fucking... Okay, that's not what I meant to click. This space right here, not to say that some people can't do it, but this is where people lose money. This is where I don't typically like to trade. This is, again, consolidation, right? Contraction, expansion. So I keep getting this. I've already, and it like kind of breaks my heart a little bit, you know, because I don't want to. But at the same time, you know, I got to give it to people straight. When I hit one of these huge plays, right, I get a couple of questions and I have them memorized. When can I get back in? Where's it going now? Not where does it have a good setup, right? People are thirsty to get in. And this is why some of you continue losing, right? You're chasing your tail, you're chasing somebody else's tail, and waiting. Like, again, the mark, Turtlicious said this today, you know, he's like hoping to get some gains because it's my birthday. And I'm like, happy birthday. But brother, the market does not give a shit if it's your dying day and you need that money for a liver or whatever. Like it doesn't matter. And that's not anything against him. Like, you know, it's okay to want that. But it's not okay to expect it because it's your birthday. You know, the market could care less what day it is. But a lot of the times and here's something that you can just go ahead and do. Before the move, and this is true, period, end of story, okay? This is an important moment in this fucking course. Because the market, while I have a lot of information to give you, once you have these tools, right, you got to keep it simple. The market breathes in and breathes out. It breathes in, it breathes out. It breathes in, sometimes for a long fucking time. It breathes out, right? Consolidation is the key to finding good plays. Now, good plays have to come with consolidation, with empty space above them. And that's something else that I'm talking about right now while we're talking about passing the baton and punching back, right? Because if you have a box, it's cool that it might signal a new high, but where is that high? And I want price to be able to move effortlessly in order to put volume into my contracts that I'm buying as a target-based contract, and it's typically far out of the money and low in volume. And so as price rushes up through that empty space, like it did on Starbucks, right? I buy on the 3rd. This is June 6th, right? So I ended up, you know, almost getting stopped out there. Next day, right? How does price move through that empty space? The same way that it fell. So when you're looking for good plays, seriously, when I can't tell, I don't want to insult anybody. Maybe I should, I don't know. But you know, some people give me tickers, and I'm just like, nah, man. You know, like I don't want to be mean, but like this thing sucks. And like even if you were to make money on it, does that train your brain to keep looking for the same shit? And does that shit deliver like this does? You know, so it's like I don't want to be a dick, but I also want to tell people exactly, you know, how I see this. You know, I kind of invented or created the strategy. So it's like what I'm looking for is specific. I want sideways action, right? And I want empty space above that. I want it to be a stock that has good volume. Don't give me a biopharmaceutical stock that fell from 200 and in 2 days went to $5 and it has, a decade worth of price action to recover. I don't want to see that. I want to see shit that BlackRock owns. I want to see this. I want to see the basics, the Disneys, right? Look at how look, delicious, right? Consolidation. How do you move in empty space? You rip. Here's your little volume pack, right? And if you can make it all the way to camp, this was earnings, you're going to distribute that volume. So why it's like, it's amazing to me because like I actually remember Disney taking off and I was watching, I was like scrolling on TikTok and somebody mentioned, they're like, who knows where Disney could go. And I don't want to, again, I don't think that trading is that cool. I make money off this shit. Like, it's, I don't like hold an ego to it. I don't tell people out in public that I know where this is. I know where earnings is going to take Disney. Like, it's going to move $3. Like, nobody really cares, So like, but when I see people make those statements, it's like, you know what? I do know where things are likely going to go, right? I look to my left. What's the first green candle to my left? That's here. Where do you stop there? Where do you gap up? You gap up above it. You have a little bit of empty space left. And thankfully, you actually end up rushing up into this area of consolidation. Okay, so let's answer some questions really quick. Garrett, so box is consolidation where the sellers and buyers are positioned, where as the range is market in waffle line. What's waffle line? Range and consolidation are both one and the same. Now, I know that looking at drifting is a part of building a larger area, right? So you'll drift on a lower time frame or like on the hourly, and then you'll pop up and then you won't go anywhere. And you'll come right back down because you've made empty space and then you'll drift some more. This creates a higher time frame range. So drifting and consolidation, you got to drift to consolidate. So without the drifting, there's no consolidating. So with Starbucks, did you get a long expiration date off the bat or did you roll overs? No. So I actually did end up taking longer expirations because I knew that Starbucks had to get past the 89.31 and I don't know. There are things that I can definitively say. Like you can expect that when a large 24-hour floor that Starbucks struggled to get over for, 3 times in a row, that you're definitely going to go and touch that new high. You could theoretically go up and touch that and reject and fall right back down, right? That was my only obstacle. And when I have obstacles in the way, listen to this, write it down. When I have obstacles in the way, when I have consolidation in the way. So let's say, and I think I mentioned this, if I decided that this is where I wanted to buy long dated options, right? Or see, let me reverse that. If I decide that this is where I see the play taking off, but I see all of it, right? I want it all. I want it, at least 103 or at least 105 because of the empty space and maybe some more. I have to look at the fact that I'm taking it here. So I'm going to add a week. Now I can expect price to move pretty quickly, but it's still going to take about 3 days to move through that empty space. So I'm probably going to have to add a week, right? I have a large area of consolidation, and between the floor and cost basis is a lovely place for stocks to try to consolidate, right? And after a big move out, what do we typically have to do? So in order to deal with these price fluctuations, right, you have to anticipate in a way, or rather measure, right? You're measuring what's in front of me. So looking at Starbucks and knowing that consolidation, right? We can actually measure this, folks, right? Even though we consolidate here, this is about, and I can actually show you on, let's see, where is it at? Date range, right? From here to here, that's 22 days. From here to here, That's 23 days. From here to here, which you start off with a big whip, right? And then you sink down, pretty much the same thing. Remember Tesla? Even now, I'm starting to pick up that each one, right, has its range. You know, even in here, even though it's not all in one range, it's exactly the same amount of days. You grind up and then it's a breakdown. So I can listen, that is that's being extra, but in a good way. You have a good setup, you see the empty space, but looking at how I pick my expirations, I might have to do a little bit of exploring. And if it's the longer, the better. Or excuse me, the longer, I might have to put a little bit of work into that, right? And again, it's not a bad thing at all. You're just measuring. This is the same thing that we did with Tesla. I think this happened a couple of weeks. Yeah, it was like right around, and we did TSLL, right? But it was even here, right? We counted. And this is a simple tool. Again, everybody wants to complicate things. This is a great way to simplify it. I can go and measure from start to finish, right? Bring that in. There you go. That's 13 days, right? I guess you could actually say it's 9 days. 9 days. 9. Right? I think we measured, generally 9. I mean, that's still pretty much on the money. 9. If you're German in here, I'm sorry. I'm sorry, that was a bad joke. That's terrible. But we went and we measured, right? 8 days is the general, or 9 days is a general solid time to start looking for a break of tension, right? Yeah, 3 nines. Exactly. If it does not, if it goes past that, typically it'll stay consolidated for a month. That's just, and that's not, again, that's just looking at the stock in front of you. Each stock, I learned this a long time ago, each stock almost has its own little personality, right? And I discovered this on JMIA long time ago. And I remember I believe we were up here at the top. And I noticed that JMIA, for some reason, was just a lot more structurally sound on this time frame than on any other time frame, right? I went down to the hourly, and it didn't feel as clean to me. It was a little weird. And a lot of stocks, Roblox is one of those ones where I've seen people be on like the 45-minute time frame. And that's what we're ultimately always trying to do, is on one or the other time frames, price action is likely going to be clear, right? It might be the 30-minute where things look the clearest as far as candle closes and points of contact. So we're looking for those that type of clarity when we're exploring different time frames. But anyway, back to where I was. Let me see. But yeah, going back to what I was saying. In order for me to place a solid expiration, again, we are going to talk about this more. I have to measure the resistances in front of me, and typically per resistance, I'm adding a week. Now, if it's something like this, right, a large area, listen, folks, this is a large area of consolidation with a floor, a cost basis, and a ceiling. That's 3 weeks. I'm adding 3 weeks to what already, if I'm taking it here, I got 1 week, I've got an extra week because of the empty space, and then you add 3 more, right? So like per resistance, typically, and let me explain why I do that. I expect for any 24-hour level to respond. Typically, you do not just blow through things, right? And even if you were to just blow through things, it still is good practice to stay within a solid, because most stocks don't move in a straight line, and every once in a while you'll have this one that maybe you get into a longer expiration and it rips harder than you expected. Cool, great, take the gift and go. But that's, and again, I'm getting a little bit off topic, but that, yeah, I did grab a longer expiration. So let's see here. What made you choose to enter before the floor of was hit on Starbucks? So that's a really good question. There are levels to this, right? There's a devil on every level. I, and a lot of other people can afford to take what we call starter positions, right? Positions that are low risk because what's happening inside of an area of consolidation. And it's a good time to just briefly explain this. The strikes on the options chain in here, or all the way, right? And all the way down here in this area lose value. So as you chop, because nobody's getting what they want, it lowers the volume. People lose interest. People sell. They're just disintegrating. And that's where I step in, right? When people forget about shit, I'm looking for that. I want what you forgot about. I want that the contracts that you have. And if that, and that's a big part of me deciding whether or not a trade is okay for me to take. I don't want to spend typically more than $50 per contract. And for some people, again, how you trade this strategy, you can tailor it to what fits you. But for me, and from my trading within my own strategy, I have found that my way, target-based contracts has been the most productive. But I will take a starter position before that, right? Before the anticipated break. And then when I get confirmation, typically what I'll do, so on the first grab, I'll grab a strike that's closer, or the closest strike that I can find that's target-based. In that case, I had 92s. 92.75 is my first target. And then I had 95s. But I didn't grab 95s until we left 89. So that's, again, a little ahead of myself, but that is something that I can afford to do. When you are profitable, right? See how you move once you move past that first resistance is what most of you who are learning need to wait for, right? But if I can grab a position that costs $200 but gives me fucking 50 contracts or whatever, and again, I trade on a $50,000 account every month. I pull the profits out. So what's $200? I pay that in fees sometimes, more than that sometimes, but that's low risk for me, and I can't afford it. Let's also say this, or make this statement. I know what I'm doing, right? I ultimately, know where, if I do decide to get out of that position, I know where I need to get out and where price will fall by the strategy, right? This isn't something that's unaccessible to you that only I know, right? It's something that I'm trying to teach you, right? Yeah. I mean, dude, I there's some trades that I've taken, that 40,000% trade that we had, definitely could have grabbed more, but those were 4 cents the day before. They were 410 the next day. But yeah, that's I do take, and what I'll do is typically use the lower time frame, right? So when I looked at Starbucks, yes, we had kind of dipped underneath that, but there's typically always something that held you up to get there. And so when I looked at Starbucks, I literally said to myself, if that low is what's underneath that low, right? So this is how I'm getting my answer, right? And this is not what I would call a quintessential box, right? You hit resistance, drop down, and you never go and touch that point of contact again. So there are tiers of boxes, right? There's high quality boxes. I would say this is a high quality box right here with 3 points of contact on both sides. This is a mid grade, you know, swag. But I told myself that ultimately there was empty space all the way back down to 85, and if that was the case, I could hedge myself or I could exit if that ended up happening. Because most of the time they'll save that for intraday price action. But next day we gapped right back up and we punched through the box that we made the previous day. And after that, I just let it fucking go. That's where you got out. I understand. But the next day, you should have gotten back in. For next time. That punch back right there. So let's say I got, and you had a whole, you get a whole night to think about it. If you get out of a trade, right, and you still see potential behind it, wipe off the dust, fucking shake yourself off. Losing is a part of this job, damn near a requirement sometimes. But there is always a way to find a way back in. It's usually our ego that's bruised and it makes it tougher to get back in, or we feel like, man, I don't want to catch an L. We associate that with danger or with a loss. But ultimately, Starbucks was something that did offer the opportunity with even at grabbing a longer, you didn't have to grab weeklies, folks. You could have grabbed the right, longer. I mean, look at how price action went for the first couple of days. It did its job, sat sideways, and then we exploded. So, all right. So I want to keep going on the rock climbing thing. And we're going to look for both. We're going to look for both the up and the down here, but we're going to kind of describe on the charts in front of us, what needs to happen or what has already happened. And so we'll go ahead and continue moving with Starbucks here. And this is going to be something that we can watch in the following days. And I'm going to give you guys some tips and tricks here on how to find out whether you can actually make it to cost basis and whether or not there's a floor that can be recovered. Okay. So first things first, right? This is actually a great place to close for Starbucks. It is as close as, besides closing directly at, you are relatively close, and gapping up above 95.88 is definitely a potential. But there's not much else that I can derive from this time frame. But one thing that I do when I do hit a target and I have runners is I ask myself what is above and what is below. So for today, I told myself that all remaining runners would be gone if we close under 94, or basically 94.50. So what did I just do there? I looked at the wick. I see these two wicks right here, right? And so we can say that we're trying to grab this floor, but that's what we would have to, what else can you hold on to? But we're not going to stop there, right? We're going to go to the 4 hour. So on the 4 hour, right, that floor, and we'll get rid of this middle empty space here. That floor, oops, son of a bitch. My bad if you guys are watching this back. There, it's fixed. Don't look at that top set account. It's nothing. So I go to the 4 hour. What am I looking for here? I'm looking at what is the floor? Because a lot of the time, what is the floor on the 4? Does it correlate directly with the higher time frame? And in this case, it does slightly differ from 95.83 to a slightly lower floor. And we'll zoom in right there. That's what I'm referring to. So slightly lower, and that's what we're pushing. That's the first red wick right there, is pushing off of that exact mark. So in order for us to grab hold, right, we need to explore what type of price action is standing between the floor and cost basis. So let's do that. All right, what do you guys see when you look at this? What do we have remaining that could lead us up to go and hit another new high? Right, and while we're on here, remember those wicks that I was just talking about? Let's take a look at how price interacts with that. Oh, that's where that first candle that went up to a new high, it retested that. That was also a resistance. Let's go to the hourly. See that? Everything always correlates. So we're consolidating underneath that target. And the benefits of having a box underneath your floor is that if we gapped up, right, you would likely come and touch cost basis and fill that and bounce before you break down. Or basically saying that this is almost like a protection. If you were to gap up, you bounce off of it. And then you'd be able to gauge whether or not it has the juice to actually bounce back up above the top of that box and continue moving forward. But this is how we can a box. Yeah, of course. Yes. I'll read these questions in just a second. Okay, so let's keep doing. Keep looking, right? So one thing that I can see above where we rejected today, which we'll go ahead and just drop a line right there. Candle close 95.75. Above that, you've got this. I mean, realistically, you have a close here, a gap up, and then a flush. So ultimately, it is perfectly possible to move up, and I would, because you flushed straight past that green candle close here, I would recognize 96.46 as basically an intra box target, right? So yeah, if I have a 24-hour box, that doesn't mean that price action inside of it is just gone, right? There's something in that like this is the box. That's what we're focused on. The majority of the volume is at the 50% mark. But in order for us to get there, right, it could still be that there is a lower time frame. Like, look, this box is made up of all sorts of punch downs and punch ups. That's a box. So you could say 97.25 is a target. But here's what's also interesting, folks. If this box is this box's basically cost basis, I'm probably off. That's why it's off. I would assume it's a little bit further down or maybe a little bit up on the red candle. Let's go back up to the higher time frame to find out instead of guessing. Points of contact are going to be right here at 99.75. And on the 4 hour, it's the candle close right there. So back on the hourly, right? And I'm not going to, that's a small price discrepancy that I'm not going to, pay any mind. This box is toasted, right? It's already been popped out of and punched through. But what did it leave behind? This is attention to detail. Maybe you have time to watch intraday, right? You're watching your position. And it's not like you're sitting there and you're terrified and you don't know what's going on. You're using all of the same things we're looking for on the higher time frame. But in this case, if that was the floor that you lost, 97.20, 97.35, how did you dump through it? Empty space. How does moving through the 50% mark with a big ass candle, how does that do for distributing that volume? It gives you a really good chance of continuing to trend up, right? Now, I don't expect all of you to just immediately be able to do what I just showed you, right? That's but it is most of you who are new. But this is why we do top-down analysis. Make it simple. Start with whatever stock that it is you're watching, and start on and we're going to have a whole little literal lesson on this. You start it on the weekly and you simplify things. You should not have a lot on your chart on the weekly time frame. It should be boxes and lines, right? Here's my floor. That's what we're fighting for. Here's empty space. Here's the first resistances up here. That's it, right? That's all I'm doing. And then I go to the 24-hour time frame, and now I have a box here and a floor there, right? And empty space on the way. So then I move down into the 4 hour, and I'm trying to see now if it's possible that we can continue moving forward with a punch back over 98.10. So I'm exploring what is price action inside of that box, which, yes, could have a box within a small box. It's actually really interesting because oftentimes, you'll have a box on the floor here, right? One that you just built and dumped from. It doesn't happen a lot, but when you recover that floor and you punch through that lower time frame box, it promises you a new high. And a lot of the times that high is cost basis itself. So you could literally you could literally get a signal for whether a higher time frame floor is going to be recovered on a lower time frame, because a box is true all the way up and all the way down. Does that make sense to everybody? Thumbs up. Okay. And this takes repetition. Can I say all of that again? um, so a lot of the times you'll build a box on the floor of a higher time frame box, and as price moves up, right? So let's again, we're gonna go ahead. Yeah, this is our floor on the 24-hour time frame. Let's say that price moved down, and it kind of does make a range right here, but it builds a box and then just flushes. So coming back up, right? If you bounce and you go to that floor is also that lower time frame's box, bottom of the box. If you recover that floor, you can't say that the 24-hour candle close has you cannot say that the 24-hour candle close has closed on that floor, because it's not the end of the day. Unless it is the end of the day, then maybe you can't. But you can't say at that point. So if you're looking on the hourly and you see that box that the pretend box that I'm showing you right here, and it punches, like it has a 50% mark and everything. It punches through, theoretically, we'll say 96.50. It punches through that. If that box tells me that you're going to make a new high, that's what my whole strategy is about, right? If you punch down below a box, you're promised new lows. You just have to figure out what those are. If you punch up through a 50% mark of a box, you're promised new highs. You just have to figure out what that is. So if I, right, have a 50% mark or a box on a lower time frame box on the floor of my higher time frame Potter box, I can use that lower time frame punchback on the hourly using this little fucker to know whether or not that 24-hour candle is going to go to cost basis, right? Because if that box tells me that there's going to be a new high, and using the example I'm showing you, the top of that box would be the floor of the old one. And remember, once you move through a box, you're using the same price points. And this price point is the 50% mark. I'm losing you guys. Take a deep breath. So this is complicated shit that I shouldn't be fucking explaining, but I am, because you're going to get it anyway. What I'm saying is that if the market is a fractal, the lower time frame box that I'm pretending is right here is on the floor and promises me a new high, just like everything else does, right? So I'll draw it for you. So I'm saying my box is here. Price action goes up. It breaks 96.50. If that promises me a new high, and that new high is the floor of that box, I'm going to the 50% mark. Got it? Does that make sense? This is, and what I'm trying to urge you to do, right? This might be a little bit tough. And if it doesn't make sense right now, do not fucking get discouraged. Okay? Do not. Especially if you're new. Chill out. It might take a couple rewatches, but you got it. All right? It'll make sense. What I'm trying to urge you all to do is that when you're looking for the floor, because right now we're looking at floors being recovered, passing the baton, we want to be able to do lower time frame analysis or top-down analysis to measure, right? But here's also measure the potential behind what we're trading. But here's also what I'm trying to save you guys. Did you feel how complicated that was? Now, can you tell why your boy likes to trade in empty space and not through boxes? So I'm not trying to teach you guys to do that, right? Because if you're technically, this is runner shit. This is what actually, once you start making money, it's at the end of the trade, often in this case, right, that we are actually doing it. So if it's complicated or it's not really making sense, then here, I got news for you. Don't trade in boxes. This is everything right here. I mean, again, I'm going to say this a couple times in the strategy or while I teach, but I trade from box to box in the simplest form. If I'm explaining it to a child, I'm trading from box to box. And why do I like to trade from box to box? Depending on if there is empty space in between it, right? Should change the name of the group to box to box. If there's empty space in between it, if it goes fast once, it'll go fast twice. It moves the same way, same time. So my point is that if that was hard for you to understand, it's not time for you to be trading that. And you don't have to. This is one thing that actually, it's a good piece of advice. You don't have to try to be good at all the things you're bad at. Focus on the things that you are good at or that do make sense. Do swing trades, candle closes outside of ranges on the 24-hour make sense? Can you make lots of money doing it? What's the problem? Right? Do that. I noticed that a lot of young men, especially, just the ego, I'm not accusing anybody in here, but like the ego is like, they have to do that. You know, we need to suffer.
The market
like,
is open.
Huh? Oh. Don't mind me, guys. My the Discord baited me into trying a top step. Yeah. Time to trade futures, right? Show you guys a live example. Wouldn't that be some shit? I'm immediately trying to. I like need to chart. Look, you're dipping. Where's my 50%? Oh no, 50% marks here. Some hefty points of contact. Ew, gross. What the? Sorry. Little break from class, real quick. Hold on. Yeah, yeah, I know. I've noticed that. I mean, I can see the play on this. You know, right now, I could literally see where this is. You're going to recover that floor, right? Like this would be a play that if I was a dork, I would take. But it sucks because it's like future. I don't recommend doing this. I'm just doing it for fun. But it's like, it's so. For those of you who are new, you know, maybe chill. But right there, right? Then you have this area of separation. I expect right here is where they're gonna fucking tossle some fucking heads, but you'll go up and test that again, and this is all inside of a larger box. When you punch back over that mark, you'll go up and you'll hit this. You'll probably hit that and then come right back down, and then retest, and then try to go for that empty space above. Anyway, all right, side break. So anyway, that you know, that explanation of how to do lower time frame analysis is an example of why, in order for me to stay profitable, the more problems I put on my plate, the more stressed out I am, and the easier it is for me to get discouraged when I know that price is not typically going to just rush through something. And if it does, I'll use the structure above to try to get back in. So, all right. So if you guys have anything that you would like for me to take a look at, and what we're going to try to do is look for things that are possibly closing on the floor of a box, anything like that, dipping underneath one. We're going to look for the two examples of passing the baton down or passing it up, or rock climbing. I like how you couldn't help but chart out the play on ES. I literally could not. I have to do it. There is a video on YouTube of how to set up your chart, but how long did it take for you to perfect the Potter box? So really quick, it took me probably 4 years, but 2 years to really consolidate everything, because I struggled with my confidence, the confidence to like, I mean, essentially what I'm saying, when you create something, it's like part of you is like, or part of what I'm saying is that a lot of you guys are, or a lot of the strategies that have existed in the market for a long time are kind of boo-boo, you know, or that the majority of people on here, you know, don't truly have an edge. And for me to step into a market that's been in existence for 100+ years and just say that I have something new was really hard for me to do, because like, it was like, who the fuck am I? But I remember watching this documentary where they went through the trading floor on Wall Street, and they were asking a lot of these dudes who were like, what did you do before this? And I swear to God, plumber, carpenter, yardman, you know, I played football, you know, I went to junior college. I mean, like, these, not all of them are like prestigious high school, or I don't know about now, but like, you know, they weren't anything crazy. And what that did is just kind of took this idea that there's some upper level, you know, top big brain motherfucker, you know, that's just designing this outside of our reach. So, and that I can't, you know, I can't refine something like some people's work. I don't think that Darvis was done. Darvis was almost there, and he just, you know, he also died broke, so clearly that strategy didn't work. But all right, so let's see if we can find an example of these things. Coin. Yeah, great example. So already when I look at this 24-hour chart, while it might be easy to try to think that it's definitely not, right? Because we're looking for candles that open up inside of them, inside of the same range, right? Open, 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 open. We're operating within the same range. And what you can see here, what coin is attempting to do, right? It actually makes a whole hell of a. Did it go to cost basis? Was I right? Oh, you have a smaller box. But you can see, I mean, I think most of you guys can already see this, right? So let's describe in detail what exactly is happening. Price falls rapidly and goes to a floor. What is that floor? The candle close, right? Because you fell fast, you rise fast. So you have 1 day to pause. Second day, you fill up all that space again. So we don't like to leave that empty space. Why is the floor there versus the other candles? Body, candle close, wick, body, and then look how prices. And what I'm going to do here is actually go. I was going to do this next and go to the 4 hour, because that can change, to your point. But what I think is important here that you might not be seeing is my box looks like this, right? Here's what actually happened. You popped out, you popped down, you made a small box around cost basis. Remember? Look, this is just, this is exactly what was on that slide, wasn't it? That was exactly what is on that slide. Now, there is a rare phenomenon oftentimes where you're going to see, and when you see a big wick kind of splitting that cost basis in half, there's a small box right there, right? And that's something that can happen at cost basis. Doesn't happen very often. NYSE opened 1792, but there were boxes even back then. So I looked at a paper from 1912 and I could have charted it perfectly. Or I did chart it. I mean, I literally was like, yo, there's no way. It's the popping in and out that's just messing with me. It confuses me. Yeah. Well, hopefully you can watch this back. Yeah, it was 1912 newspaper. I saw they like hand drew the charts out. Would you find that smaller box on the smaller on the? Would you find that smaller box on the smaller lower time frame? Yeah, yeah. Okay, so let's again, think about that slide where we're passing the baton, right? So buyers go up, find sellers, sellers push it down, and they close it under the top, right? Gaps up. Now, what's the beautiful thing about gaps, folks? What does a gap have to do in order to gap and go? Let's see how many people know this. When you gap up or you gap down, how do you continue moving in said direction? If you already know this because you're in the Discord forever, you don't have to say it. But I'm not necessarily, well, foot on the gas, but where does the open need to be? Where does the open need to be? In this case, where would the open need to be on coin? Buyer's court, right? And that would be above the top of the box. So above the top of the box, if you gap up, that's where we would move up. Okay, so if you gapped up and you went up to the above the box. So if you can't do that because your open volume, right, is not always the strongest, right? There can be good volume, but it doesn't mean good direction, because a lot of the times you'll see a high volume spike on the candles underneath you and the candle doesn't actually move, because you can have price or orders flowing in both directions and you don't go anywhere. So you can have a high volume and not go anywhere. But in this case, when you, and I'm going to teach you guys this, we're going to go over a part of the, about opens, because I have rules. And I'll explain those really quickly, right? If you open above, right? Or let's say if you gap up to a floor, you're likely going to go to cost basis. So if I was to gap up, and I think that might be what this is, you're going to go to cost basis. So gap up to a floor, cost basis. If you gap down, right? You're up here and you gap down under the top of a box, you're going to go to cost basis. If you gap up above cost basis, you're going to rip. What did I just see today? What the fuck? No, some of you guys were trading it. What was it? Sparkles? Were you trading it? Yeah, you got it. What was the one you were trading? Was it Sparkles? Yeah, was it OKLO? What the fuck is wrong with my fingers? Boom. I think that was it. The fuck is wrong with my box, though? Disgusting. I think that maybe that wasn't it. I don't remember what it was. I think this is actually a pretty good example, though, of 1, 2, 3, and then you do actually open up. I think pre-market touches cost basis. No, it doesn't. It actually just straight up shot straight out, which, again, that made a box down below, but you just punched through one. And there's a good example of. So this box, right, was actually punched through. And I think now it would probably be, C1 is true, but I would say that this is probably something that is likely going to be a higher time frame box now that you could punch through. Dude, we got 1, 2, 3 on the cues for the downside, like right now. Oh yeah, dude, that's gonna cook. That's what I was just talking about. Yeah, and look at how beefy that little box is right there. Oh yeah, look at that. Boing. Yeah, literally. I mean, tomorrow, this is where you can almost see what they're going to do. You know, like you can see how they're going to play it. Likely, you're going to fucking pop up 533. And then I see this, which I want to know how far down do I have to go to make it have structure? 2 minute? Nah, you're going to blow straight up to 534.23 and likely up to that 535, which would then be in confluence. Yahtzee. Look at that shit, bro. That's so money. Excuse me. What is 123? It is the waves. So if you weren't here the other day, or you haven't heard me explain this, things, when you're inside of an area of consolidation, typically things move in threes. Now, if you go past that, things might get a little weird, but that's your typical, and that also is in a channel, right? So let's look at this. Man, I think we're gonna pull back tomorrow, and I think if we rip hard down, I think we'll rip right the fuck back up. But anyway, yeah, you can see where we bounced off of today on the cues. Like, look at that short. Um, but the same thing could be true here, right? You got 1 2 1 2. So when you start to hit the third 3 times, when you get to the third time, that's typically where you see a break, right? So for the cues on that lower time frame, because in what he was just mentioning, 1 2 1 2. So when either one, this is when you start watching, right? Either one of those. Is that where you would go into a speculative position? Maybe I was right. Was I right on that box? Why does my box look weird here and not over there? Dude, is there an NQ? Where's the fucking NQ? There it is. I want that. Well, that bounced off cost basis. Yeah, you're about to go up. See, if I could swing it, I would run it all the way up there. Yeah, pretty good. All right. So that was coin. And I think the conclusion we can come to here, right, is that this is a failure when it comes to rock climbing. It sucks, right? No Alex Honnold. So more than likely, if you fail again, and how many times have you failed now? Let's see. 1, 2, 3, 4. You could say today is 5. So, and it's got a gap down there. And you've already hit the floor 1, 2, 3 times already. Damn. Your boy just might have found a play while I'm teaching you guys. I tell you what, though, either side of this trade could go crazy, because when you have a level that keeps getting rejected, Starbucks, eventually, if it does break, disgusting. All right, let's look at the next one. What else do we have? Apple. Oh, you already know, dude. Oh my God. Now, this is an example of something that is creating range, right? 100%. You've got crazy range here. Did I take a short on that today? I did. I sure did. I grabbed 190 puts. I think ultimately there's empty space up there. But here's the thing. As of right now, we are in an area of consolidation. As far as trying to go up and recover anything, here's a good example of recovering a floor, but you're not able to recover the one above you. And so you end up falling off of that. But other than that, this one I would say in order to have a better example of trying to go and recover something. This thing is actually this is, for everybody who's in here, this is something that all of you should be watching. And I'll explain why. It's not necessarily a great example for what we're talking about, right? It could be for candle closes, but it's not necessarily for punchbacks. But let's talk about why this is a good play. And it's simple, really. The first answer is you're in a box. Surprise, surprise, right? You're literally in an area of consolidation, which is how the market moves. Every time we go sideways, breathe in, breathe out, right? Breathe in or breathe in, right? Which that was actually a massive punchback. And you breathe out, right? So we're approaching that. And what's really nice is to know that something is going to do something, right? Even if it, and a lot of times, if it's going to end up being an area where you consolidate much longer than that, you'll pop out and then end up coming back at some point to create that range, right? But you're still going to get a move. Can't see my Apple screen. Really? Can everybody see it here? Is there a lag on the, hold on, let's see. Stream quality. Here, source, 60 frames per second. There, it shouldn't lag anymore. So, my conclusion here is that we're in an area of consolidation. We have tension, right? But what else? Can anybody else tell me why? And I explained this inside of the Discord, so if you heard me explain this, maybe don't give the answers out. But why is not only because it doesn't have a ton of empty space. I'll admit that, right? It doesn't. But what about what's happening now, price action wise, is going to create a beneficial situation for a trader within my system? Can anybody answer that? There you go. Good job, PD. Absolutely correct. And I can tell you that right now I bought 190 puts for, now I did get them for this week, right? But even going out to next week on Apple, I believe, pulling it up right now, Apple contracts start to deteriorate at 3 steps out of the money. Now, I think that's also pretty interesting because from where we're at, let's see, 206, $6 up, 200. Wow. So it's almost an equal range. So 3 steps on either side has volume. As soon as you step outside of that third strike, the volume starts to dissipate. So you could, again, we know that because of the area that we've consolidated within is going to lead for and I have a target to the upside of 220 and I have a target to the downside of 183 if we can break either. So if you can be patient, right? And right now we're flashing some lower time frame potential signals. Right now we're at cost basis. We don't have enough yet that we could start looking down. But because that price target is so far away, or because we're in the 185s, right now 185 and 182.50 contracts closed at around $30. So no, I'm not going to get up or down. No. Not with a consolidation area this wide. I should know, right? I should, if we got a floor here, so like there's going to be context clues. So this is, trading inside of a box is harder. And I'm going to show you why by doing analysis on it, right? I need to break outside of 202.60. Immediately outside of this box, I am going to be faced with this little fucker, which is a representative and a protector for this little bastard. Right? So outside of this, reclaim this, punch through this, and I'm going up. Those are things that you can set up in advance to start to get context clues as to where it's going to go. You like that? Sorry. I don't even remember saying that. Did I say that? I think I'm a pirate. I used to have dreams of being a pirate when I was a kid. So what actual contracts would you take on Apple in that example? So in this example, right now in real life, I grabbed 190s, right? Now let me explain why. Actually, let me see if you guys can figure out why. If 193 is my target, down, why would I grab 190s? What did I just say when looking at the chain? How far did never mind. Cheaper, sure, but not cheaper doesn't always mean better. I'm 3. There you go. I'm 3 strikes, 3 steps out of the money. There you go, guys. Perfect. I'm 3 steps out of the money. And how far, when we look at the option chain, does the IV push? What contracts are people buying outside of the money? 3 strikes. There you go. Right? But what is the downside if I don't get out on my target? Because my contract is not in the money or getting closer to the money. If it bounces, you're going to get cooked because you're going to see volume exactly crush you. Which means what? What do we need to do if we did take that play? What are we preparing to do? As it's no. Why are we hedging? We don't hedge. As it's approaching our target, we are trimming. Exactly. We are trimming. If we can get to a point where we can pay for the trade, right? Now, for me, I'm not going to trim a lot. I want that fucking break. Don't even say that, Sparkle. I don't. All good. No. Yeah. In the money, literally, when you're looking at your chain, means that if I have let's say I have a 197 put on Apple and it goes to 193, I'm in the money, right? As soon as it crosses 197 and goes below that, that's an in the money contract, which means price has surpassed that strike. Yeah, no, I mean all the time. Further out contracts that are lost their volume pay great, but you have to know that that move is likely going to happen, and that's what I'm teaching you guys right now. But the only difference is most everybody else shows up every day, but with this strategy, if you look at how things move, I'm not somebody who I think would want to trade much of what was happening in here at all. But, if you want the big move on Apple, the continuation in one direction on Apple, right? The make moves Apple, then the fat range. I don't want this little bullshit. Like that's something as like I've made more and more money, which is like weird because people with less money want the tinier stuff and people with more money want the bigger, slower stuff. But that's because we've learned, right? That's because we've gotten the shit kicked out of us by doing otherwise. Because while I can explain it and, I'm going to even try to trade it, trading in range is the hardest thing that you can do in this market, period, end of story. Like in range trading is a nightmare. I get fucked up. I can go and look at my calendar and be like, oh yeah, that was in range. Sometimes I'll take a trade and a candle will then establish that we're going to be in range. Like I won't see a continuation candle. I'll see a candle pull back and it doesn't go anywhere and it just stays there. And the next day, and this is a great way to know whether you're going to be in range, because knowing when this is going to happen, there's often times where I wake up in the morning, I look at my phone, I look at where we've opened, and I immediately want to go back to bed. If you open a 24-hour candle inside of the previous day's candle, if it's the second or third one, you should probably expect more than likely that you're going to stay in range. And guys, I know you're probably hearing me, but I need you to feel me without your hands. Trading in range is my number one biggest complaint. The number one reason why people lose money. Hey, Orange Wars, calm down there, buddy. But you know that this is recorded. um, but yeah, you know that is, and it's like, what inspires people to trade in range? Well, it's simple. They need money. They don't want to wait. We don't want to wait because we need it now, or maybe, you know, or you just could be excited. You know, you're fucking pumped up. You wanted to trading in range. You can trade as it sets up to break out of that range by measuring the waves, counting on either side. If you can count to 3, shit's probably going to pop, right? There's a good chance. If you're watching Tesla and it's been 8 days of sideways action, there's a good chance you're going to start moving. The answers are always on the chart. Go out and find them and adhere to what that chart tells you to do. If you want to trade Tesla and it's in the 4th day of opening up in range, stop. Get that little feeling out of the little RFK brainworm. Get it out and sit and wait and watch. Set your alerts. That's the best you can do. All right, let's go with a couple more examples here. I get a little bit off topic, but I don't think it's necessarily a bad thing. But it's also why I'm making, like, all of the information I'm teaching you guys right now, I'm just going to have in chronological order, right? Which in some ways, I think, like, being able to dig into a certain aspect of, like, you know, I'm showing you this floor and you guys want to know, well, what, if I tell you no, like, no, I'm not going to answer, like, you know, what contracts I don't want to take because I don't want to get ahead of myself. Like, I would rather give you information you don't necessarily understand. Like, if haven't done the contracts, maybe you don't even know what the chain looks like right now. I still want you to have that information because you're going to put it together as we move forward. All right. Yeah, drop some more requests because I don't want to scroll up there. My little finger, my big finger, actually. It's not little. I got big hands, guys. Ask Donald Trump. Are we going longer every night or doing an extra day from yesterday? No, I'm just going to keep chugging along yeah, I'm not going to overdo it. I'm not going to overload you guys with information because we missed a day. So did you go over the red? Oh, I'm sorry. No. Let me see. I didn't see that, Pete. If you can't take a trade at the end of the day, is it okay to take the trade when the market reopens, assuming this? Yes, absolutely. You just have to prepare in the morning. Yes. You gotta help me find this question. Red lines. Where are they at? With regard to opening in range, can you talk about when we see a rip like Tesla on recent and when we open up after a large move? Wait, hold on. With regard to opening in range, can you talk about when we see a rip like on Tesla recently and we open up after a large move? Like opening up in range, like underneath the floor? Is that what you're talking about? I don't remember all that. I set my alerts. I'm in Amsterdam and I'm prepared to stay up all night. So what like and you're saying on Tesla. So you hit a major price target, right? A major floor, and now you're consolidating. Is so opening up in range on the 24-hour, right, would mean that at least for now, tomorrow's candle will likely gap up to the 50% mark of the other candle, wick and hit the red top, and then fall back down and hit the red bottom, or vice versa. But that is and it's literally I can watch it on the 24-hour, go and tap the top of the candles and just stop every time. But that's what you're looking for, a price opening up on the 24-hour inside of the previous day's candle. I'm not like Nvidia now. Let's see. That is exactly right. That candle right here, they're all opening up inside of the ranges that were set, right? Even the candles opening up in the wicks can't get past, which means that the 4-hour has candle closes. It's juicy. That's juicy. So what does that mean, right? This is another thing, right? What does that mean? That means that if by some chance the market moves up, holy screaming, right? We can expect a juicy, juicy rip. Now there's not a lot of empty space, but there is a box. Oh, well, yeah. So you would have to go and punch back over that 50% mark right here. And then you would have a target of 149. I would assume 150. But at the same time, buyers coming up for the third time coming off of, I want to call that two. I know you get like multiple wicks off of it, but I'd like to call it two. Um, you're bouncing off of that. Not to mention that's your old cost basis. Wee, right? So tomorrow, right? Now you can so to your point, right? Nvidia has been opening up in range, and you're watching it, and you've got your alert set. What should you be doing now that we've hit this for the third time? You should be looking at what's underneath you. And I promise you, in the next 2 minutes, I can find a trade setup on this. Or show you, rather, where the trade setup is on this. So let me show you. You guys see this? Can everybody see this? Without me even saying a single word, can you see and understand what you're looking at in front of you? Just this area. Can you rather, let me say this. Do you understand what price action has been doing? This is the area that needs to break, right? And this is the area that needs to break. And you're creating tension in between the two. You've also closed under areas where sellers control the price. So now it's a waiting game, right? Or a reaction game. I'm going to go to the hourly. Beautiful. Retest, end of day. So, I mean, listen, my toes are fucking curling right now. I'm about to lose it. Oh my God. It's all there. It's all always, the answer is on the fucking chart. Floor, right? Cost basis breaks. Floor, you've already pulled volume out of that shit. So you've already kind of dampened it. So you should be looking for a break under 140, 150. What's underneath you? Empty space. Don't pay attention to this shit. That's garbage. Pay attention to the most recent price action. You've got a mini box. This is standing guard at cost basis. Or at the floor, excuse me. If that is lost, you will go and you will fill your gap. That's the play. And because sellers have been making a serious effort, and buyers have also been making a serious effort, and buyers can't seem to get you moving. They still can, there's still a chance, but you would still have to get well above 144. Now, I can take what I just did and see, okay, my target right now is 139. What does that do for me on the 24-hour time frame? 139. Okay, imagine a big red candle closing red right here. Or maybe you bounce, because that would make for a kick-ass place to bounce, would it not? Because that could all honestly set you up to pull back. Sellers get what they want. You jerk it back up. You're still in the box, so you're not getting a signal down. And you could pop right back up. Now, if that sounded like a lot and really complicated, again, stop trading in range. Stop trading in range. Wait for the triggers to break. You can go down into the lower time frames, but you gotta know what you're doing, and you need to have for sure. Okay, so let's go back to what we were saying. Let me answer. You have a box below and a red line, so it needs to push through the box and hit the red line to push down. So the red line right here that I'm on right here. Yes. Yes. I need a candle to close against it or underneath it. Okay, let me scroll up here and try to answer these questions. I have a question. Just wait. Why wait to take trade end of day? Because analysis is top to bottom, including all the data. So end of day is a practice and a habit that the majority of people who struggle with intraday price action should be doing. Because yes, some things are going to move intraday. I mean, Starbucks, but Starbucks also offered an entry last week. Um, so as you, the goal and the focus is to make money. So that way you can start to, yes, it opens up the possibility of you taking something that you're tracking on the 24-hour chart that triggers intraday. Now, I will say that that mostly happens intraday and not, or that happens on individual equities, not on ETFs. Very rarely does that happen on ETFs. So, all right, let's see here. From what I see, MBO gapped. Does this mean it's going to come down and retest the box? So let's see. So from what I see, NVO gapped up to is at its key floor of 80, and it closed underneath it. Does this mean it's going to come down and retest the box it came from? Okay, so let's look. Okay, so from what I can tell, right, looking at this line, look, this is attention to detail. Look at this candle. Ugh, can't get past. This candle can't get past. Candle opens up above them, it shoots up, right? Fills up 50%, I believe. Or was it yeah, it's from the top. 50% of what's left of that empty space and pulls back, right? Also creating not a box, but a range, right? Anytime you see that big wave up, big wave down, I typically split that in half. Milkers, you'll have to do it in the morning, man. Don't worry about it though. You'll write that password down, my boy. um, so here's what I would actually say about this. Your floor is here at 77.66. So while it did hit a key level of 80, and maybe on a lower time frame, there's, like you said, a floor, ultimately, it still has recovered a 24-hour floor. So that means that it is trying to grab. It is trying to rock climb, right? So as of right now, are we measuring 50% of the entire long typically where it starts to consolidate or the top of the box? Um, so as of right now, you have to hold 77.89 or you would be liable to fall back down to 75.50. So let's see here. Would the candles going up, breaking past cost basis still being in the box indicate price action being in buyer's control only when punching through the whole box? Are you entering when the candle closes above, below the box, depending on which way you're trading, or what do you mean by triggers? Um, let me read that again. No, 50% mark. 50% marks means that buyers are in control. Um, yeah, the whole box. So when cost basis breaks, theoretically, you could take that to the top. Now, if that happens all in one day, you could hit the top, reject it, and pull back to cost basis. You have to close above. But yeah, I mean, um, and I'm entering typically. So every part of the box can serve as a stop loss, which means that I can use. So I occasionally will grab positions on the floor if I can set a stop loss on it, or sometimes I'll take them at cost basis while they're still leaving the box. Okay, you're having a hard time. Okay, boxes and ranges. We're going to answer that right now. Box, candles opening up inside of themselves, staying in between two price. Range, break down, pop up, and just straight up flush. That's a range, right? That's just a area where price kind of sat, right? But it's a range. That's it. So shitty boxes or things that don't have full boxes, those are likely going to be ranges. Um, this is my confusion. When you say close below red line and you are at the 1 hour, if I go lower, the fuck? What does the TF mean? If I go lower, wouldn't a 5 and 15 minute have a different price? Yes, they would, more than likely. However, I would stop myself out if it would have waited for the 30 minute. So yeah, so what I'm um trying to think of how to explain this. Okay, so each time frame, right, is going to have its own relevance. And how well that translates from the 24-hour matters. So let's do this, right? Maybe that. Yes, they can. Okay, so I'm going to try to do it on this. So with Meta, right? I need to see a candle close on the 24-hour above 660, right? Clearly, that's the bottom of my box. That's what I need to happen. But this obviously would have been something that would have been kind of shitty to wait towards the end of the day to get, right? So go to the 4 hour, and now I can start to see a little bit more structure. That line that I just showed you, my friend, is now, wait for it, cost basis. So now on the 4 hour time frame, I have a floor that's been rejected, a cost basis that needs to be broken, but it all lines up, right? So we're looking here. Look, that cost basis, look how perfect it is. That cost basis is the top of that red candle. So if you are watching for Meta to break out and you want a 24-hour candle close up against or outside of that, and you wake up that morning and price is all the way down here, and you're like, well, I would have to get all the way up here to 656 and then punch through cost basis. And what would that say? If that box promises me a new high, and that is the resistance that is keeping Meta from moving up to cost basis, what do we think is going to happen? Right? That is going to move you up because that is the last resistance. An hourly, a 4 hour box is still valid. Now what, right? I said all that, but what if that doesn't line up and it happens even faster? And I can't wait for a 4 hour candle. Okay, let's move down, right? I have 2 hour candle. The box and its cost basis stays the same, perfectly the same, actually. And that's good because if it translates well from the 4 to the 2, then I can use it. So I need now a 2-hour candle close to trigger the same 4-hour box that would trigger the same 24-hour wall. All three are connected. And now I move to the hourly. Cost basis remains the same. The floor probably could move down just a little bit, which would move down cost basis just a little bit, but not much. In fact, pennies. So we'll go ahead, we'll say that that's about the same, right? So now you could take a 1-hour candle close or break, especially that you wicked it once. You wicked it, right? And then you pulled back and then you went back up. Usually when you fill 50% of a wick, you're going to keep going. It's a good little tidbit right there. A punchback is when the retest fails and it does grab that floor and it goes through that box that it was just originally retesting. Slightly lost. Are you saying that the 24-hour 4 to... No, I'm not saying they should be. I'm saying that there can be. And that's... So what he's saying is that if I have this 24-hour setup, right, and I want to see... And this happened, you know, I want to see a break through this box. And I want to try to grab it on the floor, right? So that's my goal. I want to get up here into this empty space. I want to take this punch back. And so I'd like to go and take it when it recovers that floor. That's the period in a story. And a punch back is, again, like that right there. You broke down, you could, you know, long retest, but you know, you re-tap that floor, you pull back. And that's, if you were to punch, well, that's not a box underneath you, but if you were to fall underneath that, you know, that would qualify as something that would trigger us down. So a punchback is when we move back up, right? And you could hit cost basis and reject, and that would still be a retest, or you can hit cost basis, and if you move past it, you're going to keep going. So it's the cost basis that differentiates whether it's a punchback or a retest. But typically, you're going to retest the floor, not cost basis. But all right, so again, what he's saying is that the 24-hour time frame is something that we can't trade, or if you wanted to take it at that 660 and you said you had to wait for the end of the day, well, how does that help you? It doesn't, because it literally rips past all of your triggers. So every single day, right? Or, you know, sometimes the analysis you set out for the week, if you stay in range like this, will stay true. But you move down, right? And you see, well, what is at that 660, 659, 80 price target? That's the 24-hour. That is the 24-hour wall I need to break. And lo and behold, there is a box there, a box. If the price targets around that box stay the same, right? Because what he was just saying is that a lot of the times the chart changes as I move time frames. So in this case, the cost basis remains the same, meaning that as I move down, the requirements for candle closes get lower because the same price is respected all the way down. Now, if I went from the 4-hour to the 1-hour and that box turned into a wicky, sloppy mess, then it wouldn't be. But it is. So an hourly candle, right, punching over 660, just as it would on the 4-hour, is what will give me a new high. But because I can see that same box and everything is the same on the hourly, I can use the hourly. I could go to the 30-minute. If the 30-minute remains the same, I can, right? And let me say this, it's not always. Like, this is actually a great example of something having coherence and staying clean all the way down. It's a great example of that because that does not always happen. A lot of the times your box will be so trash on the 10-minute or 15-minute, and on the 30-minute it clear as hell. So with that being said, if I can find a higher time frame play clearly, or a higher time frame trigger on a lower time frame, then I can use that. Okay, how many of you uh, feel like what I'm saying makes sense right now? Again, I don't care how long this class takes. I know some of you guys might, but I don't, because I'm going to make sure that everybody fucking gets this. All right, even if I have to circle back to it tomorrow and approach it from a different angle. Different angles are good. I didn't mean that to sound weird, but now that I'm thinking about it, it sounded a little weird. Oh. So you use higher time frame to find the play. You know what's so funny is these kids have poisoned my mind. Where every time I read that, I think so. The higher the fuck, um, higher time frame to find the play, then go lower. Go to lower ones to find when to enter. So yeah, we find. So a lot of the times, okay, let's get this out the way. Sometimes a like on Starbucks. Starbucks is something that you could have just taken purely based off of 24-hour candle closes, right? It closed, I mean, is that really, it actually ends up wicking down, so you had to be careful, but um, it closed, right? Even if you want to look at it here, but a lot of times, right? Sometimes price will start moving out. So if I, again, even just on Starbucks, if I wanted to make sure that I had a good entry, right? And we did this. We actually went to the hourly and we said, well, what's above on Starbucks? Well, Starbucks had a gap. Starbucks had a box, right? It's got long legs, but 2 wicks off the same mark, candle close at cost basis, top at 89. That is a gap and a very small box. That's where a lower time frame setup, right? Because if I said to you, we're going to take an hourly punch back on Starbucks, and you look at that box and it makes sense, and then and then you say, well, where's the target? And I say the empty space above, and you zoom and you zoom, and you're like, holy shit, right? And you go to the 24-hour, and that's a 24-hour setup. Perfect. That lower time frame trigger can be used as a entry. So when you find a good 24-hour setup, what I want you all to do is to start on the weekly, come to solid, simple conclusions. Go to the 24-hour, find the structures above and below, highlight the empty space, mark out your imbalances. If you can, find trend. When you go to the 4-hour, do you have anything? Like sometimes you need to delete what you just drew on the 24-hour, or make sure that it doesn't blend in between time frames, which you can do by clicking on and going to visibility and clicking on the time frame that you want that to stay. So go to the 4-hour and go look for what's above and what's below you in greater detail, and continue doing that. And each time frame, you're looking for, how do we get there? Right? How do we get to so I found what's above and below me. How do we get there? What lower time frame setup will trigger, if we're in a box right now with a target above and below, then where's the perimeters of that boxes to get above or below? And if you keep doing that down and you keep being repetitious about going through your charts, you will. If it doesn't make sense now, it will. And it will. This is something that we're all, humans are designed. We're literally designed to recognize patterns. It just keep staring, keep looking, keep charting. Especially for those of you guys who feel like you got it, but it's not really making sense. I mean, imagine me trying to explain to you how to put a thermodynamic wrapping around a fucking space shuttle. You'd be like, what the fuck? But if I took you under my wing and we started building space shuttles together, I'm sure after a couple of months, you'd be sleeping in thermodynamic wrapping. I heard that on a YouTube video. Let me go live with you. Live with me. Yeah, no way. Yeah, yeah, in the chicken coop. Well, how to determine cost basis? So that is done by the actual box that you draw. Six producer, bro, just explained how to learn. You need to explain how to explain. It's to spell explain. I'm just playing. Um, so milkers, when you draw a box by grabbing the rectangle, when you double click on the rectangle, it'll put or style click middle line, and that'll put the cost basis. So if you can find the parameters, you'll find cost basis. It's just little. It's literally 50% of any area of consolidation. Okay, Alex. Yeah, I'm not letting you live with me. But also, for those of you guys who are new, be patient. You haven't yet started using the tools, right? To you're not going to need those tools until you start doing it, and until you start doing it, you won't understand how to use those things. So just, you know, take time and start charting. Start charting, and especially, this is a good opportunity. If there's anybody in here, uh maybe after live, you guys, just post how long you've been doing this. And there might be somebody who's been doing it around the same time that you could partner up with. You don't have to, like, be best friends or anything, but just in terms of trying to learn together or something, or work together. Or if you're in the main Discord, one, just, a lot of people go into the study room on Fridays or Sundays or Saturdays, and they go and talk. And if you go in and ask, yo, does anybody want to do charting tomorrow? Don't say, hey, does anybody want to chart in an hour? Everybody's going to be doing shit. Married milkers, I'm sorry. Maybe if you're almond milkers, but I'm lactose intolerant. I'm sorry, but you're going to sour inside of me. Whoa, hold on. Damn, I might need to edit this video. Ivy, help me. All right. Can we get more homework? Look at this nerd. No, I'm just kidding. Yeah, we're gonna look for some more homework. Nobody clipped that. Oh my god. Hold on one second. What are you saying loud for? Or wow. Alex, can you give me a copy? Is there a situation or a time frame when you would not wait for a candle to close for an exit or entry? Um, Overall market conditions could potentially, um, if I see, let's project, okay? If we go up and we hit cost basis on Starbucks, and I see SPY, right, in that time frame, break down and go for a close under 596.50. If I can recognize after, so let's say simultaneously, Starbucks is hitting this and this is starting to lose 598, right? Now, first of all, I'm gonna trim there, or Q's, I'm sorry, SPY. No, SPY. Oh, you're saying Starbucks is in the QQQ? Um, Roger. I think the SPY holds some Starbucks, right? Almost positive. I could be tripping. 20%? Damn, yeah. Starbucks weight. 0.20%, sorry. It does matter. It does matter because if I'm looking at like IWM, right, it wouldn't really like IWM doesn't always run with the rest of the market. Sometimes it lags or something. So like if I know, right, that so everything is always going to be based on the chart, right? So again, with my example here, and I could say this here, but I'm just going to say like if we're sitting at 97.68 and we're losing 98, right? And Starbucks starts to pull back and go to its 96 floor. If I get a candle close underneath 596.80, which means that we are going to go and head down to fill a gap. Remember, there's a gap at 592.75 and a floor at 591. That is more than likely, highly likely, to cause Starbucks to lose that floor as well. And if I see empty space underneath me, I'm going to go ahead and get out. So I mean that there. Listen, that question is. I mean, I could talk about it all day. With different setups. I mean, some setups because of the risk to reward, right? The contracts are really cheap. The consolidation's long. I might get in beforehand, right? And it might just be based off of that. A good third candle is closing as it's moving up towards cost basis, right? I might, take that position, um, or take it early. Um, but I think with everything, and again, I've been doing this for a long time. There is always a sign or a signal, right? I oftentimes see like if I'll take a trade and it punches the box above me, it'll go and hit a target and it will pull back to the top of the box it broke through and build another one and then keep moving forward, right? If it was to go and drop down underneath the top of that box, generally that's a terrible sign. And so like I might stop out because if I can, and a lot of the times it actually has to do yeah. So you can tell by my explanation. There's a lot of different scenarios which I will react to differently, I guess, or make a decision. Um, there's certain stocks that like Apple. I mean, Apple's fucking irresistible, right? And it's showing lower time frame potential to go down to that floor. So, where do I find this info? Find what info? Like everything that I'm saying to you right now? Or sorry, I might have missed the moment when you dropped that. Oh, you can just Google it. Yeah, just Google how much Starbucks does SPY hold. It holds exactly 1,213,717,149 dollars. Old Google. But we'll talk about those things a little bit later. Um, sticking to candle closes. That there is, yes. The better. Here's what I'll say, and I'll leave it at this: the better you get, right, a year in to at past the point in which you feel like you can identify setups and you're starting to make money, there's no reason why you can't. You're going to, and a lot of you in here who are experienced, I would say junior, um, definitely not Juan. No, I'm just kidding. But these are Jorge. There's a lot of people, but they're people who I can tell that they are taking positions on things that might be considered a little early, but in their eyes, they've had enough experience with this system and with way putting it all together, right? We get better at putting it all together. And so maybe the waves are all past 1, 2, 3 in, at resistance. Like that, there are signs. And the more that you get to know the beast, the better you get at taming it and knowing when it's going to move. So, all right, how long have we been recording here? 2 hours. Perfect. Since you'll know, what is that? I think Hims is doing that in the box it's in. Let's see. Oh, yeah, dude, listen. That is tension. That is tension. Max tension. In fact, let's do a little experiment. You guys want to try to make some money on Hims? Because that thing's gonna move. All right. Let's do what most of these nerds won't and count. Okay. 15 bars. Okay. 15 bars. Cool. 15 bars. Cool. Half the bars. Noted. Peep that. What the fuck? What the fuck? You guys got disconnected. That's too funny. Okay. I don't know what the hell just happened, but Alex. Alex kicked me off of the speaker. Oh, Ivy did it. No, it's not me, guys. I was still connected. I was still connected. Alex said, no, it didn't. I don't know. Chefs, yeah, I don't know what that was. Why is it always, it's perfect timing. I was playing contractors today, and this guy that I've played with a couple of times, he literally asked me like what I do, and I'm getting into the part where like I'm literally talking about Starbucks, and I'm like, yeah, we buy really low price contract, and then my game proceeded to crash 3 times in a row. I was like, I don't think they want me telling people this shit. Yeah, I don't think I pushed anything. My hands were away. All right. Anyway, let's keep looking, huh? Let's see if we can keep counting. Oh, wee wee. Oh, I mean, it still moves. Ivy's trying to. She's about to wage war on the entirety of the Philippines to get her Wi-Fi back. So, I mean, I would say, guys, that there's a standard 21 days or 15 bars of literally consolidation on Hims. And I can also see that the tighter and cleaner that consolidation is, the more enthusiastic the breaks are. So, literally, I mean, this thing is cooking and it has a great floor. God, and when you see this, people, don't doubt it. That is where buyers, that is the fortress. That is, what is that place called in Lord of the Rings? Gondor. That's the center of Gondor. It's probably not right, but that's the floor. If you break that, you will fall. Your job is to find the next target. Uh, Bro, you know I don't sleep 8 hours a day ever since my internet went out. After this, I'll be wide awake until 4 p.m. Damn, Ivy, you need to take some melatonin gummies. Dress up as a cat and scare your cats. Yeah. Go. Oh no, we're still in rhythm. 15 bars is how long at Hims. You guys can go and do this as your own experiment. You go over here to the fucking, it'll say long position, right? Date range. Gotta star that. And start at the first spike and go over to the last candle before takeoff, right? 15 to 16 bars. Boop. Right? But it seems like half that is also permissible. Look, half of that here, half of that there, here. I mean, just being able to find the motherfucking average of how long something goes sideways is incredibly helpful. I mean, even here, it's almost like it had to. Look, you broke down, retested, and then finally broke. It's pretty good shit, man. And honestly, this is a new discovery for me too. I didn't know that. I knew that it happens on stocks all over the place, but guess what? We just got to know Hims a little bit better. And next time, we might get a kiss. Next time, maybe it invites us over for a drink. No, it's not a patch update. That's crazy. That's too funny. No, I mean, the time in which a box consolidates, right? That can be stock to stock, you know. But here's what I can say: Hims is gonna move. That's for sure, and it has good targets down to 46. Hey yo, and you know, I would say to the upside, I get scared sometimes, but honestly, I think if you just set up the perimeter as above that 58.50, and I mean, you're gonna shoot for 62 first, and then you're just gonna straight up shoot for the high of 66.50. I don't know. I have a box right there. Oh, that's from the higher time frame. Every stock has its own love language. Yeah. So, all right. Now we covered a lot, right? We covered recovering floors, right? And this is, you know, MUs here, so we'll just talk about that. Recovering floors, as in rock climbing, which means that we're looking in order to keep going up for candles to close on the parts or the places where buyers control the price, right? Support. And then we've also talked about passing the baton, right? About dropping under or giving sellers the ball and how to accomplish that. It's the same thing that we do when we're trying to give something to buyers. We're driving price under and we're getting price to close, right? Now, this is a beautiful example here. You go and you dip the low, retest the cost basis, and flush dump. You flush dump fast, you create empty space. Oh, we traded it here. Oh my God, you guys remember that? Oh, I remember this. Oh, that's right. We did it twice. That's right. No shit. Because you had sorry, Jimmy Neutron. You had the box right there. Yep, the box right here. And we traded it from here to there. I remember that trade. That was last year in August. Yeah, you go peep the gains chat in August. You'll go see the gains from that. All right. So we've discussed both of those things. Now, what I would like for you guys to do is, and this is going to be a little bit more obscure, but I would like for you guys to find me examples of punch downs and punch ups where the floors have already been recovered. I don't care, you know, maybe stay within the last 5 years or 2 years would be nice, but I want you guys to go find basically what I just showed you, right? Find the boxes below that you need to punch below and find where those candles go to hit cost basis, bounce and hit the top, or just simply close price underneath the top and you begin to flush. Now, I will say this before I move on because I'm going to forget. In a bear market, dropping down into boxes, if you are going to keep moving lower, typically you're going to close, and before you get to cost basis, you're going to test the top. This is like just that little piece of information, and you're going to remember it right when you need to. So typically, and again, The reason why you're doing that is because you do not want to leave empty space. So again, when you are in a bear market, this isn't the most important piece of information in the world, but when you are in a bear market, most of the time, as you move down, you will do a lot of the retesting around that area while you're moving. Meaning you'll drop into the top of the box, and before you just flush to cost basis, you'll do a quick tip tap of that fucking top. You might even, obviously, you do hit cost basis and you try again, but you'll oftentimes retest that before even going down. And you'll even see that right here, you open up, test the floor, and then drop down to that weight. Damn, Colleen, you always have some fucking fire ass health tips. You do diet planning? Need somebody to plan my diets for me, dude. I gotta stop door dashing. I'm gonna be making you guys pay me in snacks soon. Yeah, I can. All right. So, damn, you fat. Um, you getting on the game? Yeah, I am gonna get on the game. How many snacks for lifetime? You got to get me some like Japanese snack boxes or something, you know? About 20 of them. All right. So I'm going to go ahead and end the recording here. But again, I would like for you guys to go out, find those examples of just find punch ups and punch downs. So that way we can go and look at those. I just want you to continue to be looking to identify the boxes, but also be breaking or identifying when floors are being recovered and what those candles look like. So, all right, we're going to go ahead and stop the recording now. If you guys are watching this back, make sure to take notes, write questions. I don't care if this is 2 years from now. Hopefully I'm still around to answer them.